Welcome to the Integrated Advisory Series, where we talk about the evolution of wealth management and how a client's most trusted advisor, their accountant, will lead this evolution. I'm your host, David Judy, and I'm joined by my co-host, partner, and good friend, Tim Copeland. Well, welcome back to our evolution of insurance portion of our program here. We talked a little bit on our last episode about how, we believe there's an evolution that needs to happen in the investment industry, and I would facet to say we're leading that evolution to a large extent, and how our investment philosophy works. But I want to take a little bit of time in this episode to talk about the evolution of insurance, because I think that although I don't think we're as far down that path as an industry, I do believe that that's where we need to get to, and I think that we've made some significant strides on how we build that business. So why don't you touch on that a little bit on, I think us coming together and how that's maybe led each me being, starting as an insurance guy in my early 20s, and this collaboration, I guess, over the last 15, 20 years, and how we've really designed a different service, I think. And I was going to say product, but it's not a product, it's a service.
Going back to my experience in accounting firms when I was doing tax work and different pieces, and just having lots of conversations over the years with different accounts, insurance is often a dirty word. Mm-hmm. Okay, the perception of it, it's just wrapped around the industry. It's wrapped around a bunch of different things. But accountants, tend to feel it's salesy. They struggle with it at times. And even when I first started down this path, I didn't fully understand the value that insurance can bring to clients. It took time and experience, delivering a check on somebody's death and really seeing the impact of that changes your perspective pretty quickly. Yeah, it does. But I think it's more around how insurance has been sold and how that industry has worked that's given it that sort of reputation. And this is really where, I firmly believe, and we've proven that through firms we've worked with, that when accountants get involved in risk management, and risk management is the first step. It's, mm-hmm. If you need insurance, it's because there's likely risks or there's other opportunities that you need to look at. But having that be part of a planning process that starts with the accounting firm, with the financial planner, that's looking at business risks, personal risks, what happens if something happens to a key person in your organization or an owner, if they get sick or die, or how do you pay your mortgage if something happens to you, you become disabled. There's so many areas there where you can have the best laid plan and goal, and you haven't considered those risks, it's not going to happen.
Well, and I think the missing pieces in many cases is, first of all, very seldom do insurance people start with the risk, okay? Right. But you identify the risk first, and then you identify what are the funding options. Right. So most insurance is sold on, I'm going to sell you insurance and let me tell you why insurance fits, right, versus saying, okay, well, let's identify the risk. And then there's more, there's different types of funding options to take care of that risk. Why don't we make sure that you understand what those options are and then make the best decision? Exactly. And by the way, in many cases, it's not insurance. Okay. In many cases, it is insurance. In many cases, it's a combination of the two, or there's two different strategies. So it starts with planning and identifying the risk. And I think for me, coming from an insurance background as a senior executive and being in that world for a long period of time prior to going and saying, okay, well, now I'm going to be quote unquote a salesperson, maybe identify risk differently, because once again, when you're involved in an insurance company, how you invest money, how you mitigate risk is a big part of, what you do every day. And that's why I first went out and started dealing with clients' accountants.
Right.
You know, I think that making sure that everyone's on the same page, talking about the risks that we've identified, getting their opinion, really led to me being much more successful because it was more collaborative.
Well, and that's what we talked about. That's what brought us together. But you were the anomaly. You know, when I look at and I hear these comments all the time when I attend insurance conferences or different things where, you know, we don't want to get the accountant involved because they're going to kill the deal.
Well, yeah.
You know,
Right.
like if they get involved, they're going to ask too many questions, and
Yeah.
all of a sudden, I'm not making a sale, right? Like that. That tends to be how the industry operates, and I think it's refreshing when people actually are trying to take a professional approach, and that's really what we're trying to do through integrated advisory and changing the financial services, especially in insurance. We're trying to professionalize the way that that's delivered. Okay, and I think the insurance industry starts with products first, and then they try and push it into planning. We want an approach that starts with planning first and then goes through a series of steps that only arrives at insurance if it's needed. So
Right.
if we can get rid of eliminate the risk, we can reduce it to a level that's acceptable, we can defer it. You know, there's all these steps in risk management that we want to go through that the accountants and the planners are more than skilled to help clients understand. And ultimately then if insurance comes in because we need to fund it, that's the only solution, that's when then we're engaging on the insurance side, okay? So it's trying to professionalize that, and I think that's all about process and how you position things with clients that really changes that. But the second issue, and maybe you can speak to this, David, is compensation. And I think, you know, professional services generally are always transparent. You know what you're paying.
Not in insurance.
Yeah, so talk, and I think that's
Right.
probably why it has such a
Yeah.
bad rap. So talk a little bit about
Yeah,
that.
well, it's a challenge. It's amazing to me. It's one of the only industries I know of that you could collect a premium for the year, and someone's going to pay you more than what you collected for a premium for the year. It's baffling
compensation.
in compensation. And you know, it's the way the industry's been designed, and it's also a eat what you kill type of mentality. The importance of having, you know, this recurring revenue as part of any business, I also believe helps you do the right thing.
Right.
The challenge for insurance advisors specifically is they don't have recurring revenue. So in insurance, they sell an insurance policy, they get all of this commission up front. They might get a little bit of what they call trailing commissions, but they're a fraction of the overall compensation, and not enough really to compensate that advisor to service that account. And what happens is they get paid all this compensation up front, and then if the client cancels the policy in the first 24 or 36 months, they get some of it charged back. And they never tell the client how much they make because they're embarrassed, right? And I don't think they articulate that they are getting paid up front, and they may be having to service that account then for the next 10, 15, 20 years. That was, I'll tell you, it was a huge change when we started working together.
Yes.
Okay. You know, we've delivered.
I remember pushing you a little
Oh
bit.
yeah, exactly. I still remember the first one. I think I think the compensation was about $150,000, and you're like, yeah, and we're gonna go and we're gonna tell them exactly how much we got paid. I'm like, okay. What fascinated me was the client's reaction in going through that. It was transformative for me, but it also forced us to resell the reason why, right? That whole planning piece.
It held us accountable because
Right.
if we couldn't explain to the client the value that was being created through the solutions that were being proposed and the impact it was going to have on their family or their business, in comparison to how we were being compensated,
Yep.
it probably wasn't the right solution.
You got her.
And I think we had many experiences with that, and in your whole positioning on how the industry works, how they're compensated, having that as part of the dialogue with the client was very informative to people because they in their gut knew there was something not quite right with how insurance had the experiences they'd had in the past. And when we went through and explained that to clients, fully disclosed it, I don't know how many thank yous we've had to date, but in most cases, clients are going to look at that and they're going to go, thank you. I finally understand how this works.
Now, I will tell you, my preference is not to have this structure. I don't believe that it incents the best behavior. Exactly. The challenge is that most insurance, I'm not going to pick on an industry I'm part of for a long, long time, but there's a mindset of next victim, as terrible as to say. So how do I get that compensation up front, and then how do I move on and sell another one? And that's where integrated advisory is so imperative. And the client has to understand that we need to be compensated for the long-term obligation that we're taking on to service this insurance policy. Right. And yes, we get paid all up front. Now, it is interesting. There's a lot of conversation happening in the industry for more levelized compensation. Yeah. We'd be, huge advocates of that. And behind the scenes, we're doing a lot of work actually with some of the major distributors and the insurance companies trying to facilitate that. But it's it is what it is, and I believe you got to tell people how it works.
It'd be like the investment industry only being able to sell mutual funds on a commission basis. Like, that's the true comparison. If you sort of look at
it sort of is, but unfortunately 80-90% of them still are. Yeah. That's until the regulators change that.
If you don't have a fee model,
right,
based on service, and all you're doing is you get bad behaviors that you do in the investment industry. You get churning of accounts that are just transactional based on I'm getting paid and you're not making any money. But as soon as you talked about that in the last episode of aligning objectives with clients. So if you align an investment objective that says if your money's going up, we're doing better as well. If it's going down, we're not doing as well. So we're in alignment. If all it is commission is your only option, it's tough to have that alignment. So there are, as you say, some changes happening around the world to try and levelize some of that compensation. But I think until that happens in Canada today, the answer's got to continue to be disclosure and education. And I think it
doesn't. I would add, insurance is extremely important. And in many cases, when you look at funding options, insurance is one of the best options from a dollars and cents perspective. And I think what happens is that because it's complicated and because there's such a bad taste potentially in people's mouths, including accountants' mouths, okay, we're doing a disservice to that client.
Right.
We're doing a disservice by not looking at all those funding options and making sure insurance is one of those options and doing the right thing for the client. And I'm passionate about that because I delivered my first death claim check the first year I was in the business, and it changed my life and the way I looked at business and the value that I brought. But it has to be planning focused.
Well, I think that's the other reality of what happens in risk and insurance today is you usually have advisors that have a couple of strategies.
Yeah.
Right? It'd be like investing with stocks and bonds, right? I've got a couple of things that I'm going to sell that I know well, but that's not really planning. I'm good at two things, okay? And the challenge that I've seen over the years in working with clients is that, they do have a budget. They don't have, many cases, unlimited resources.
Right.
And when you've got to look at insurance like you build an investment portfolio, right? You want to have broad coverage across the various risks that you're going to have. And what I tend to see happening without planning is all of the budget dollars that are available to manage risk go into one piece.
Oh, sure.
And so then now you're not covered in critical illness or long-term care or health coverage. You got life to cover your mortgage, but you're missing all these other pieces which probably have a greater probability of happening. So,
but the reality is the vast majority of advisors have a toolkit with one tool in it.
Exactly.
Right. And that also works sometimes with accounting firms, right? It's all reorganization is the most efficient strategy, but it's the only strategy sometimes that people look to. And if you open your toolbox and all you see is a hammer, you're going to figure out how a hammer can fix everything.
Right.
And that's just not good for the client.
No.
Now, the other thing is that you need, to make sure you've got lots of choices, even in hammers. So we talked about that in us utilizing other advisory firms and other who's. In our case, we can access every single insurance provider in the entire country. And that's really important because certain types of products and services, certain companies do much better than other companies. Yeah. And And that changes as time goes on. If you don't understand the market, whose pricing is better, who has the features and benefits that are really important for this particular client's solution, you're really limited. And there's still a lot of advisors who, by the way, only have a hammer and they only work for one company. And I think that's an issue.
Big time, yeah. And so again, it's all about flexibility, comprehensive planning, being able to bring that best-in-class, professionalized experience that really is what we're trying to do through Integrated Advisor. We're trying again to change the industry, leverage the professionalism and the trust that the accountants have already built, right, and do it in a way that's educational. I think that's the first stage in changing this insurance, is helping clients understand what they are doing. I think accounting firms are really well positioned to take advantage of that.
Well, they are. They are the trusted advisor. You have to leverage that relationship. And we talked a lot about scenarios and technology and things of that nature. You need to know, how is this going to impact, my portfolio? If all this individual does is sell insurance, well, they probably don't care about the investing. Well, how does that affect a client's long-term plans? And you have to take that into consideration. The other thing is that we're talking about life insurance right now, and obviously there's lots of different types of insurance. In our case, most of the firms we work with are dealing almost exclusively with business owners, so there's lots of insurance needs. We do a lot of work in the group insurance side to make sure that there's integration between business owners, making sure they're providing the best possible products and services to their employees, but also in many cases, how those group benefits for the business owner can dovetail into their personal investments and risk solutions. So it's complicated, but I think it's even more important on the insurance side that you've got a great strategic partner who that is the cornerstone of their business.
Well, I think it's that, and then obviously the process. And we wrapped up sort of the last episode talking about a little bit of the roles, investment counselors, planner, accountant. I want to touch on that here as well as we relate to how this works in the firm context. So obviously, going through discovery, engagement pulse, which we talked about, discovery is going to determine whether there's risks that need to be looked at a deeper level, okay? And the service offering then is a risk review, being able to have the financial planner in the firm look at aspects of business risk, personal risk, and identify whether there truly is an issue or not, and an opportunity to provide solutions. And so from there, they're able, because of the discovery, they also talked about who's on the team. And oftentimes what we find is when we get to the insurance component of who your advisor is on the team, the answer we get back is not always glowing.
I haven't seen him since he received his commission.
It's not always glowing. So there often is an opportunity to professionalize that and make introductions. And I think that's where, through the integrated advisory model, we've got access to resource partners through WealthGo, insurance, and then accessing full access to the market and carriers. But being able to bring those people in as part of the team. Again, they're not operating on their own. They're not dealing directly with the client. It's not a referral. It's an integrated team process where the planner brings them into the equation. Our insurance specialists, their client is the planner. And ultimately, they're taking direction from a planning perspective as to the client's needs and best interests of the client. So it's really, again, tying all those pieces back to deliver an exceptional client experience.
Well, it's small things sometimes. We help the planner actually put together a one-page summary on the insurance products and services that these clients have. And what's fascinating is 90% of people actually have no idea what they even own for insurance because of that product peddling relationships that they've had, and have no idea if there's any synergy there. So,
so starting with pulling it all together, getting a sense of where they're at today.
Let's not start with going and trying to sell something. Let's start with trying to make sure we've got an understanding and see where there's going to be value.
And often there's a lot of value that just comes out of that where they've been oversold. Sure. So where going through a review, there maybe there's too much sold. And it's not about doing more, it's about doing less, or doing more with what you already have. And I think, again, that's the professional side of that. It's okay to go, you don't need insurance, you got too much. And I think What insurance advisor is ever going to say that? Very few. So it's a different approach.
It is. It is. Great. Well, yeah, insurance is always a bit of a challenging part of the conversation. I think that a lot of people have preconceived ideas of insurance and the value of insurance. I think that it's really important to make sure that you've got a who on your team that is an expert in that area. So,
I just to wrap on that, I truly believe burying our heads in the sand as an accounting profession because we don't like it, because it feels uncomfortable, it feels salesy. We're taking the wrong approach if we do that. Sending them out the door and go figure it out. Our job is to help our clients. And when we see that industry operating on that vein, we have a massive opportunity to make a big difference in that and how that's delivered. And that really should be our calling, is to get more informed about that, not run away from it or push away from it, but to push into it. Yeah. And I think where firms have done that, they've made some really big inroads with their client relationships.
Huge impact there. And it's going to happen. Somebody's selling those products and services. And that doesn't mean that they're being done in the best interest of the client.
Exactly.
And you're right, it should be a calling. And accounting practices should be looking at making sure that they're protecting their clients and providing the advice that they need in that area. So obviously, we're both very passionate about insurance, its importance, but also how the industry has to change. And, we've tied a little bit into, in the last episode, this investment philosophy, this evolution of investing. In this episode, we talked about the evolution of insurance. But maybe before we close, can we just touch on the service model as a whole? Because it's obviously not just insurance solutions or investment solutions. Why don't we speak to that a little bit?
I think mid to long term, and this is staging it in for accounting firms. But if you look at what firms are doing, is they're really trying to deliver a family office model for the masses. Mm-hmm. And I think investing is important. It's part of it. Insurance is. Financial planning, obviously, is the starting point, amongst all the other things that the firms already do. But there's so many other aspects of execution and support that can be provided to clients. And I think you can look at some of the firms in the United States, and they're doing everything. From financial health to mental health, the
mortgage
physical health, you're really integrating all aspects of a client's life in firms, and that is really what we want to be able to deliver through integrated advisory. Is we really want that one-stop shop that people can come in through the firm. They can get access to all the financial support they need. They can deal with any types of financial transactions that they're trying to handle, whether it be to sell their business, buy insurance, deal with investments, buy a home, get a mortgage or a loan. It's all of these facets. Integrate their health. How does that fit in? Because if they don't have their health, what's the money for? So it's trying to really take that holistic approach. And again, as we continue to build out that community, there's strength in numbers. And I think the more that we are able to bring together, the more that we're going to be able to broaden that network. We're going to be able to have more strategic partners. And I think you're going to just continue to deliver a model that is going to provide an excellent client experience.
Yeah, the evolution applies to us. Right. And we're going to consistently and continually evolve. And it's going to be exciting to see, I think, what those products and services are. We've had a glimpse of that south of the border, and you're right. It's fascinating how it ties into. I think we were looking at a firm in the U.S. that was doing consulting for aging parents, how to keep them in their homes, things like that. So key issues. The key to us is community. And we talked a lot about how we invest, and by pooling all these assets together, we get opportunities that you'd never be able to access as an individual. That's exactly what this service offering is. by pooling all of these firms together and all of these professional CPAs together and their clients, we're going to be able to scale and offer opportunities that individual firms never would be able to do.
Right, and I think in the last episode, we're going to talk about why the timing is so important. As borders are disappearing and things are changing, we talk about these great U.S. firms. Well, pretty soon there'll be Canadian firms. And I think it's understanding that this is a global professional story.
The when is now.
Yeah.
Let's touch on that in the next episode. Okay. The when is now.
Yeah.
Okay. We'll see you in episode 8, which will be our final episode. I hope that you enjoyed this episode of the Integrated Advisory Podcast. If you'd like to see how much Integrated Advisory can boost the bottom line of your firm, visit integratedadvisory.ca/calculator. Download our Integrated Advisory Revenue Calculator. This resource will show you how to grow your firm without having to increase the number of hours you work. Visit integratedadvisory.ca/calculator. Download the free calculator today.